What do you make of the sell-off?
Yeah, I was listening to you guys before, particularly what Steve and Mike were saying, and I think there's two big things going on. Short term, the Fed hikes, when the hikes occurred, the window was open, so they took the opportunity to hike. That hurt the rest of the world more than the U.S. in a variety of different ways. And then the trade war on top of that also hurt the rest of the world, particularly China and Germany, two big export surplus-driven economies. So you've got that, and those directly relate to lower growth expectations. So that's one thing. The bigger development that the Fed is battling right now, and going to probably likely battle for 10 years, is the debt shelf that's out there. So you've got debt shelf, which is deflationary in nature, and you also have something known as the displacement factor. Anytime prices rise for whatever reason, whether it's tariffs or something else, there's a displacement mechanism out there that, give it time, takes over and lowers prices. So those two things, debt displacement plus the short-term Fed hikes and trade war, are causing two things: lower growth expectations and specifically lower inflation expectations. So the bond market is unfortunately stuck, and yields at the back end are dead. And that's what we're going to be dealing with. So our view is pretty simple. Productivity starts to take over, and eventually you get a soft landing, which reignites the stock market. But first, the bond market has to settle down.
But soft landing is the key phrase there. You're not looking for a disaster scenario of any kind. You think the Fed can manage our collective way out of this?
Yeah, I think what the Fed said specifically recently is we are in a wait-and-see mode. And from the standpoint of what the market's saying is what are you waiting to see? And if that is lower inflation expectations to the point where they can't reach their target in the next couple of years, then the market is correct to force the Fed's hand, and you'll see lower rates at the short end over the next 6 months. But they have to come to this realization basically within the next quarter or two.